Chris, great to speak with you again. Now we're catching up to discuss your latest research on Southern Palladium after the company completed a $20 million placement at $1.10 per share last week. It was a catalyst for you to provide an updated valuation on the company. So can you just talk us through the latest inputs, taking into account the strong support for PGM prices in 2025 and your current valuation range for the company?
Yeah, g'day, Alex. Thanks for the opportunity. Yeah, no, great to see the appetite was there for a $20 million raise. We were delighted to be involved in that. And importantly, it went to two big international resource funds. So I think that's important. That really does add a good deal of credibility to Southern Palladium. So very, very pleased with that. But just on valuations, I mean, that does allow me to change my valuation a little bit. But it's sort of, and certainly the recent share price strength has allowed me to adjust upwards my valuation. As I've portrayed in previous research, we've looked at two valuation scenarios. And I have to stress, these are very conceptual, but I continually get asked by shareholders and potential shareholders, but what is the valuation of this company? The project itself might be worth upwards of $1 billion, depending on your commodity price assumptions. But what's it worth in the hands of Southern Palladium? So I've used two scenarios. One, which is sort of a fully integrated and staged project. Remember the stage one, 200,000 ounces per annum, still a big mine in its own right, and then expanding some 8 or 9 years later to 400,000 ounces. And that took quite a lot of capital out of the project, best part of $100 million US, over $100 million out of the project. So peak capex now about $279 million in the optimised pre-feas study. I've also assumed 50-50 debt equity funding on the project and or debt to capital for the project. And I've also assumed for this, because there was still a bit of equity to be raised, that they'd sell down to 50.1%, say to an off-taker. Again, purely conjectural. And then there's a modest equity raise. Again, I've assumed at $1.10. That generates an NPV of about $5 a share, so a significant premium to the current share price. Not saying that that's the share price target at the moment, maybe long-term, but it certainly does show that there's a very strong embedded value in Southern Palladium. The other option, which they flagged in the optimised pre-feasibility study, was a deal whereby they may look at toll milling of the ore, so effectively take out $140 million US out of the capital and then sell to another mill in the area. And there are a number of mills on the Eastern Limb, as we know. So still 50-50 debt to capital, but no sell down. So they'd retain 70% of the project and a modest equity raise of about $1.10. And that generates a valuation, again, very conceptual, fair bit of guesswork in there as to what they're going to have to pay for toll milling and that sort of thing. That generates a valuation of about $5.50 a share. So about 10% more than the first option. So again, stress again, very conceptual, but it does indicate that there is significant upside for this project, and that upside will become apparent as the feasibility study is completed and as they move towards financing.
Okay, so turning to the more technical side of project development, your report notes that this placement leaves Southern Palladium with ample cash to advance the definitive feasibility study works program at Bengwenyama. In that context, can you just explain why the current assessment of a shallow decline has the potential to unlock some additional near-term value?
Yeah, no, it's a good point, Alex. Just to stress that these guys already had sort of $8-9 million in the tin from an earlier raise. That would have been enough to take them through to the completion of drilling. They're doing some metallurgical drilling, some geotech drilling, mine planning and so on. So they had enough money to do that. But then when the appetite was good, I think management then thought, well, maybe there's an opportunity here to do a little bit more. In my mind, putting in a shallow decline, and this is by no means committed, but it is being suggested by the company as a likely outcome. A decline, and it would be a very shallow decline. They're talking about mining ore, first ore from depths of 50, 60, 70 metres, that sort of depth. So it's very, very shallow. Probably not open pittable, but certainly underground mineable. And it may be that this decline could be put in very quickly. Again, this is subject to permitting and they haven't got their mining right yet. That's imminent, but again, all that has to happen. For me, and I think probably for the bankers, that being able to access the ore early would significantly de-risk this project. It's always a risk with an underground mine, what the geotechnical conditions are like, what's the ore body like, can we actually put our hand on the ore body and touch it? I think that would significantly de-risk the project. I think the other angle, which is interesting, and again, this hasn't been spoken about by the company, but it's one that I've been postulating for a while, and that is the possibility of being able to get access to toll milling. So if these guys could produce a bit of ore, could it get to a sort of a self-funding situation? Could they actually start mining ore and sell it to one of the many mills, at least 3 mills within, some tens of kilometres from this project? Toll milling, maybe outright ore sale, who knows? But what we do know is that at least a couple of those mills are struggling to fill, or the mines are struggling to fill the mills. One in particular, Marula mine to the north, owned by Implats. It's an old mine and they're really struggling to fill that mill. We were at the Two Rivers project, which is a Impala African Rainbow Minerals project to the south. We were there a couple of years ago, and a couple of years ago, those guys were saying, gee, we really would like another source of UG2 ore. These are big old mines and they're getting deeper and they're struggling to fill. So it's possible, or if it can be accessed early, could be sold or toll milled by these mills, which says to me that perhaps there's a possibility of early cash flow for Benguanyama, and maybe as early as next year. I don't imagine it's going to take all that long to sink a decline once the permitting's in place. And as I said, the mining rights should be through hopefully within a month or so. The chairman in his recent presentation said he would expect the mining right to be granted by the end of the year. So that really puts a different complexion on this project and could see ore/cash flow within a visible timeframe.
And just lastly, Chris, you noted that your current valuation is still based on a conservative estimate of PGM prices. Can you just give us some thoughts on the current market dynamics for platinum and palladium, and how Southern Palladium is potentially leveraged to the upside for ongoing strength in global PGM markets?
Yeah, no, good point, Alex. I mean, we really haven't changed our commodity price assumptions since we started writing on Southern Palladium. Then we used 1,300 platinum, 1,200 palladium and 7,500 rhodium. And remember, in the last cycle, palladium, I think, got to nearly $3,000 an ounce, rhodium to nearly $30,000 an ounce. So our numbers were well below the previous peaks at the moment, and they have come off. The prices that had rallied strongly have come off. Platinum's now about just over $1,600 an ounce. Palladium, a bit over $1,400 an ounce. Rhodium is now starting to bounce. That's a bit over $8,000 an ounce. To me, I think there's still further upside. We've seen a pullback in the PGMs and a pretty major pullback in the gold price, because these metals have rallied really very, very strongly indeed. So a bit of profit taking going on and so on. We did notice that commentary out of the US that palladium, which had been outperforming, may well be outperforming because there's been a threat of further sanctions on Russian palladium because of threats of dump and all that sort of stuff. That's a court case that's going through at the moment. So that's why we think palladium was doing very well. Look, I think for all metals, platinum, palladium and rhodium, there's supply deficits for all metals, particularly the case with platinum, less so for palladium, but fairly big for rhodium as well. So I think while those supply deficits are in place, and while there's still a great deal of talk about internal combustion engines and them being the future rather than EVs, I think everyone got a little bit G'd up on the future for battery-driven electric vehicles. I think the demand for the PGMs is still going to remain quite robust. As we know, it's a mature sector, so we indeed see growth in demand for the platinum group metals, then we should see ongoing strength. We ran this is spot prices from a couple of weeks ago. We ran our NPVs at spot, and I think that had platinum well over $1,600. As I said, it's pulled back a bit. But for that first option, which is fully integrated, mine, mill, concentrator, our valuation expanded from $5 a share to $7 a share. And option 2, that is without the concentrator, so assuming toll milling, our valuation of about $5.50 goes to over $9 a share. So, this project is certainly very well leveraged to commodity prices. So sooner the better. Let's sure the board has not lost sight on the fact that prices are good, and let's try and get this thing into production as soon as possible. So all looking very encouraging.
Thanks, Chris. Look, as always, really appreciate your insights. Thanks for joining me.
My pleasure. Thank you, Alex.